What's going on, guys? My name is Richard Moglen and welcome to another video. And today is the introduction to my new trading rules series, which I'll be posting a video every single Friday, kind of walking you through how to build up your trading plan. So the goal of this series is to, at the very end, you should have a fully fledged trading plan that you can use and modify as you learn more, gain more experience, and learn what works for you. So each of these points right here is going to be its own separate video. Today we're going to cover the general market trend, and all of these bullets and points here are extremely important to consider when building your plan. And I'll go through my personal trading plan to kind of give you an example on how specific you should be and also the general criteria that you need to cover. This is a series I've been wanting to make for a while now because I think it'll help out a lot of people who right now don't have a plan or process to guide their trading. And I also want this series to be kind of a discussion. So if you have any personal favorite rules that help you determine that general market trend, let me know down below in the comment section. And please go ahead and leave a like down there as well. I would really appreciate it. And of course, if you're not subscribed yet and are looking forward to the rest of the series and videos like it, go ahead and hit that red subscribe button. All right, so with all that said, let's jump into my actual trading rules and talk about how I assess that general market trend. And what's important here is that we're not trying to predict what the stock market will do. What we're doing is determining what the current trend is and aligning our trading with that. And as all good CAN-SLIM traders know, the market trend is the most important factor of whether stocks will go up or go down. And so it's the most important thing to consider when deciding how to trade. So whether you're going to go long, go short, or stay completely in cash. And CAN-SLIM without an M would just be CAN-SLY, and that's just not as cool. So always make sure you're aligning your trading with that general market trend and don't swim against that current. So anyway, I use three different things to basically determine this trend. The GMI Signal from wishingwellball.com, the IBD Market Pulse, and the QQQ Daily GMMA chart. And I want to make sure that's in a red, white, blue pattern if I'm going to be going long. And overall, the market is trending upward if any of the following are true. So basically, I just need one of these things to be turned on to be able to go long in either stocks or ETFs. And the market I've determined is trending downward if all of the following are true. So right here, I need all three of these indicators that I use to be basically turned off in order to either short or invest in inverse ETFs. So it's a lot easier for me to go long. There's a lot less rules that need to be turned on for me to go long. So I'm going to go through each of these three things I look at and talk about how I interpret those signals. Okay, so first up, we've got the Wishing Wealth blog GMI Signal. And this blog is run by my former professor at the University of Maryland, Dr. Eric Wish. And every day after the close, he computes the GMI score, which is ranked out of 6. And he'll usually post a table that looks like this, that lists all the 6 different criteria that he looks for and tells you whether or not they're turned on or off. And then if this overall GMI score is less than 3 for more than 2 straight days, this overall GMI signal turns red. And likewise, if it's greater than 3 for 2 or more days, this GMI signal turns back to green. And historically, when this GMI signal is red, it is a bad time to be investing in the stock market and going long in positions. And I'll put up a chart right now that basically shows a historical performance of the market versus the GMI to kind of show you how when it's red, you want to be in cash, or there could be a serious crash like 2008 or what's going on right now. So that is the GMI. And if you're wondering what each component means, he first looks for new highs. He's got 2 criteria for that. Then he's got his own proprietary basically short-term uptrend indicators for the QQQ and SPY, then a longer term. And then he also takes a look at the IBD Mutual Fund Index and whether it's above or below that 50-day moving average. And I'm not going to explain each component here because Dr. Wish explains it for himself right here in this article, which will be in the description. And he goes through each each criteria, explains it in depth, so that you can kind of get a sense for how he's determining that overall trend. And the reason he likes new highs so much is because his strategy and my strategy and a lot of O'Neill, Minervini type strategies are based on stocks breaking out of bases and hitting new highs. So you basically want to be trading in an environment where that's possible, where a lot of new highs are working, like Chewy, Netflix, Amazon, like what's going on right now. So, and then here with the short-term QQQ and SPY uptrends, he's looking for basically whether or not they're above key moving averages. Then the weekly is a more long-term moving average, and the IBD Mutual Fund Index, as I said, he just wants that over that 50-day moving average. So I definitely recommend reading that article and using this GMI signal, which if it's red, I'm very hesitant to take new long positions. So next up, we've got the second criteria for my rules is basically checking the IBD Market Pulse. So IBD is a great resource for stock traders. And if you go over here to the big picture, which they post every single day, they'll basically summarize everything into one table that basically determines their overall outlook on the stock market. So I read this every single day. I think it's a great kind of summary of the action that went out throughout the day. And if you go over to the Market Pulse box right here, they'll basically give their current outlook. And right now we are in a confirmed uptrend, which uses the word uptrend. So I'm okay to be going long based on that criteria. And the last one is the QQQ daily GMMA chart has to be in a red, white, blue pattern. So if you'd followed my channel for a while, you know exactly what I mean by this. But let's go ahead and talk about it in TC2000. So the red lines right here are short-term moving averages, and they're listed above right here. There's a 5, 6, 8, 10, 12, and 15. And then you've got longer ones that are in blue that are 30 through 60. And basically you want the general market, or in this case, the QQQ, to be in a red, white, blue uptrend, which basically means the red moving averages are above some white space, which are above those longer term blue moving averages. And you can see this works very well, especially in determining those quick drawdowns and potential corrections. It got you out right in late February before the worst of this crash, and currently we are still not in a red, white, blue uptrend. So that part of my rules is off, but I'm okay to be taking long positions because this criteria is met right here. And finally, the last thing that is basically determines the market trend is if we've had a fall through day and the current close is above all QQQ daily GMMA red EMAs. So we have had a fall through day, but and this is actually the TQQQ. You can see that we are now above all the red EMAs, and we actually started that right here. So at that point, I was okay to take long positions, and that pretty much covers the signals that I look for. And if any of those are true, I'm okay to be investing in long positions, whether it's stocks or ETFs. But if all of those are not true, then the market is trending downward, and I'll look to buy to sell stock short or invest in inverse ETFs like the SQQQ. So those are the criteria that I use, and what I like so much about this method is it doesn't take a lot of time, or it doesn't take that much effort to check up on the market trend. I can quickly Google wishingwealthblog.com and investors.com, take a look at that GMI signal. Is it red or green? Are we in a confirmed uptrend? And what does the pattern look like on this chart? And quickly, I've determined how I'm going to trade based on those factors. And basically, that gives me an edge because I'm trading with the trend, and basically the wind is at my back. And that's what we want to do. We want to be trading when the environment is suitable for giving us an edge. So I hope you guys enjoy this video. And one last thing, these rules, you can use them if you want, but I recommend that you find something that works with your style. So the point of this video series isn't to basically give you my rules, although I will do those. I will give you them as an example, but I want you to develop your own system that you can use easily to help guide your trading. So I'm giving this as an example of how specific you should be with your rules. But anyway, I hope you enjoyed this video, and please, if you did, go ahead and leave a like down below, and of course subscribe if you haven't already. But otherwise, I'm really looking forward to the rest of this series, and I'll see you guys in future videos.